Yes, good afternoon. This is Kathleen. So I'm Kathleen Gaffney, and I work with Jesse in the Energy Efficiency Division of the IEA. And I was just going to do a quick intro before Jesse can do her presentation. She's going to talk about the work we're doing on tracking the progress made in the global ESCO, Energy Services Companies market. And this webinar is built off of a prior webinar we gave earlier this year in February. It contains a few updates, like new data for some of the countries that we had previously profiled and a few new countries as well. Jesse will walk you through that in case you were familiar with the work the last time. But I just wanted to say that this is part of the IEA's larger work on financing the clean energy transition. Here at the Energy Efficiency Division, we've included some of this work related to the ESCO market in the IEA's recent publication, the World Energy Investment 2019 report, which was just launched, last week or something. So if you haven't had a chance to look at that report, please do. And in there, you'll find some of this data, the latest data on the ESCO market. The ESCO work that we do is also prominently featured in our annual publication, the Energy Efficiency Market Report, which if you look up what we did last year, you'll see some of the preliminary information we had at that time. And our next report is scheduled for this October, and we'll be able to include more updates on the ESCO market in that report as well. And then finally, just really what we're all about here in the Energy Efficiency Division is advising governments on the different policy measures they can implement to advance energy efficiency progress. And I think what we're really hoping we might hear from some of you today is where are you coming from, and what kinds of questions you might have about what different types of policies can be enabled to support ESCO market development. So whether you're coming at it from industry or from government, we would really appreciate getting inputs on the different policy mechanisms that are working, and maybe there'll be time for a Q&A around that topic towards the end. So with that said, I'll just hand it over to Jesse.
Hi, good afternoon. Thank you, Kathleen. I'm Jessie Glicker. I'm on the energy efficiency team here at the IEA. So first I'll give a short overview of what we'll be talking about in a bit more detail today. First, we're going to go over the investment needs for energy efficiency regarding some of the IEA's scenarios. Then we'll be talking about the IEA Global ESCO Association survey that we conducted earlier this year and last year, where the majority of this data comes from. We'll discuss some key findings of that survey. We'll talk about the size of the global ESCO market, and we've got some 2019 updates. We'll do an overview of a few major markets. So we'll be looking at Belgium to sort of discuss the European situation. We'll be looking at China and the United States. Then we'll be checking out the relatively new IEA ESCO website, where all of this will be hosted. So you'll be able to go and look at the IEA website and find all of this information in more details. And then we'll discuss briefly what the future scope is for this work, and some new markets that we've got up now and what we're hoping to have online in the next month or two. And there's a nice picture of what the website looks like. So first, in terms of what energy efficiency improvements could be possible, this is an overview of the role that energy efficiency plays in the IEA's energy outlook. This was first presented in the World Energy Outlook 2012, but it's still used for our current scenarios. This outlook quantifies the opportunity for policies and measures to realize the potential of all known energy efficiency measures that are economically viable. And as you can see, energy efficiency plays the largest role in obtaining the IEA's sustainable development scenario. So in order to realize the sustainable development scenario, energy efficiency investment levels need to significantly rise. So if you're looking at this the first graph, that's the current energy efficiency levels of this past year, and energy efficiency would need to double annually between now and 2025, and then double again between 2026 and 2040 in order to reach the levels that are required to achieve the Sustainable Development Scenario. And now we'll have a look at some of the primary available financing models for energy efficiency and where ESCOs fit into this larger picture. So here we have some of the key financing options for energy efficiency. Overall, there are many options available. Here they're arranged from commercial to public options. Of course, all of these mechanisms are nuanced and can be moved around within an individual market. So here, this is sort of where ESCOs lie. It's important to note that what is missing here is the personal investment category, people using their own funds to buy appliances or otherwise invest in energy efficiency. So that's just one thing that usually is taken for granted as a form of energy efficiency investment. So starting at the beginning of 2018, the IEA, and this has been ongoing work, started this IEA ESCO Association survey, where we reached out to a grouping of national ESCO associations and conducted a very extensive survey with those associations, and as well as some energy efficiency departments in the government. And this is a product of that. So we first released some of the information in our energy efficiency market report, as Kathleen had mentioned, and more updates will come in the 2019 report. The survey covered ESCO financing models, energy performance contracting, and related policy measures. It's important to note that we're focusing on performance contracting, so the majority of our work refers specifically to energy performance contracting, and therefore specifically guaranteed and shared savings models. Overall, the survey covers 80% of the major emerging economies, so Brazil, China, India, Mexico, and South Africa, and we're hoping to get Indonesia up online soon. It covers 20% of the G20 and 60% of IEA membership. And just this week, we'll have Turkey online, and next month we are going to have Morocco and Ireland. So you can stay tuned for those fun updates. So it's also important to note that there were some additional resources used. In particular, the JRC, the Joint Research Center's 2017 Energy Service Companies in the EU. They conducted a terrific survey, and I believe they are in the process of their 2019 release. So that our survey has included a lot of information there. So if you're on a lot of the individual pages, you'll see a link to where that information is included in the JRC report, as well as the quality work funded by the EU's Horizon 2020 program. Some pictures. Which provided further insight into the European level ESCO market drivers and barriers. So now to dive into some of our key findings. So this is our 2017 regional figure. We're in the process of doing our 2018 updates, and we're expecting this figure to grow moderately to somewhere around 31 billion USD, which is largely driven by the Chinese market. This is up 8% from just over 26 billion in 2016. And again, a lot of this growth over the past 5 years has been driven by the Chinese market. So now taking a look at what end-use sectors ESCOs operate in. Overall, when looking at the market by end-use sector, the market is relatively evenly split between industry and the non-residential building sector. The strong presence of non-residential building projects is linked to the long-term versus short-term thinking of building owners. Public sector customers have long payback horizons and use ESCO models to supply capital for neglected building maintenance and building modernization. Privately owned commercial buildings, particularly rental buildings, generally will not implement long payback projects. They look for quick paybacks through the implementation of a single technology project, for example, lighting or control upgrades. because short payback projects produce short-term increases in net operating income, which increase the capital value of the building. Therefore, commercial rental buildings are not the target customer base for ESCOs. And also, it's important to note that there's virtually zero ESCO activity in the transport sector. So now, what kind of organizations typically engage ESCOs? And this is looking just at the private versus public sector. And there's quite a trend here between the more developed ESCO markets, the developing ESCO markets, and also regionally where certain ESCOs are operating in the private or public sector. The US, EU, and Canada are driven by ESCO activity in the public sector. However, some of the biggest emerging markets, including China, India, and Mexico, are predominantly private. A lot of this is dependent on local government legislation, which can sway whether projects make more sense financially or legally to carry out in the public or the private sector. Legislations and incentives also heavily influence how easy or difficult it is to engage with an energy performance contract. This is something that we will see when we look more specifically at the Chinese and the U.S. market in particular, where the legal or financial incentives are in place in that country to drive the market towards the private or the public sector. So in terms of what kind of contracts are most common, typically, guaranteed savings is the most common form of ESCO contract, which accounts for over 50% of all energy performance contracts. A shared savings model is also quite popular. The United States has a different form of energy performance contracting, which is outlined on the United States page online, but this heavily influences what kind of projects are most common, as well as what local accounting principles are available, or what local accounting principles are in each market, which will drive how a contract can be accounted for on or off balance sheet. So now taking a look at some individual markets. Here we've got the Belgian market, which is representative of a bit of a snapshot of the European market. The European market recently underwent some changes toward the end of 2017 regarding accounting principles of how an ESCO project can be accounted for on or off balance sheet, which quite significantly increases the ability for an ESCO to pay for the project and have that show up off the balance sheet and therefore not affect the debt of the ESCO or the liability of the ESCO. So here, when looking at the Belgian market, we see sort of this split between non-residential and industry projects. So that's very representative of what's happening globally. Non-residential and industry playing the largest part in the ESCO environment. They've got a high amount of ESCOs operating in both public and private, which is very common in the European situation. However, it is largely dominated by the public sector, as we saw in one of the previous slides. And guaranteed savings, energy performance contract guaranteed savings are the dominant form of ESCO contracts in Belgium, which is indicative also of the European market. Now moving to China, which is a very different market and very dominated in the private sector. The Chinese ESCO market takes up about 60% of the global ESCO market. And as you can see here, there has been continual strong growth, and this is expected to continue in 2018. There was this large boost where the market kicked off in 2011 from the 12th five-year plan with a set target for 16% reduction of energy intensity in the Chinese national plan. And this is something we'll talk about later in terms of policy that is important for growing the ESCO market. This was something that really affected the Chinese ESCO market. The government encouraged private industry to contribute to this goal by exempting ESCOs from corporate income tax for 3 years, and then a 50% reduction in corporate income tax the following 3 years. ESCOs were also exempt from sales tax and provided clarification that ESCO projects could receive subsidies for both central and local governments. So there were a lot of incentives put in place in the Chinese market to grow the market, and recently a lot of those incentives have switched or changed, so it'll be interesting in this current 5-year plan. So it will be interesting to see how this has affected the ESCO market, or if the ESCO market is able to continue despite this change. And one more thing in the Chinese market, the government created an accounting system which allows for commercial banks to treat energy performance contracting revenues as part of the security for energy efficiency loans, which allows for ESCOs to maintain a larger credit line to complete more energy efficiency improvement projects. So this is harping back to the European situation. This is very similar in terms of how an ESCO is able to account for an energy savings project and how it might affect the credit of the ESCO. So looking at the overall figures for China, we have a sort of the inverse of what was happening in Belgium, a much larger portion of industry, but also residential buildings. We've got, again, sort of the inverse, very large private sector, smaller public sector use, and split evenly between guaranteed and shared savings. And now moving to the U.S. market, which is, again, quite different from the Chinese and the European case. Without getting too into the nitty-gritty, because the U.S. has a much longer history with energy performance contracting and ESCOs in general, there are several variations of the type of contracts employed. For example, energy performance contracts in the U.S. are often referred to as ESPCs, especially for federal contracts. And if you look here, the majority of the U.S. market is in the public sector, so that's very important to keep in mind that they have a separate form of contracting for their most common form of ESCO projects. There are several key drivers for the large amount of ESCO contracts in the public sector in the U.S. Some of these key points include the vast majority of ESCO projects are for government customers because the credit risk of the financial institutions is much lower than for private customers. Additionally, federal projects do not have to sign a debt agreement, which makes adhering to EPC projects more desirable. Due to the long, well-established history of the U.S. market, there's a lot of enabling legislation that has been worked out over the past 30 years explaining the accounting principles for relevant policies. And this is something that, in speaking with a lot of ESCO associations and ESCO markets, is incredibly important for the customer, the end user, or the financial institution to feel secure with signing the contract if there is a well-established long timeline of successful projects. A lot of this is outlined in more detail on the ESCO portal, which we will now have a look at. And just quickly, before we go on to that, we'll give a brief overview of what is going to be, what the next steps are with this project. We're going to be delving more into the other finance opportunities for energy efficiency and where ESCOs can fit in with that work. We're developing an online country comparison tool so that you'll be able to look at the ESCO markets side by side and be able to compare and contrast similar markets. We will continue to update the ESCO market analysis and resources, so we'll continue to add countries. We will continue to, we're hoping to add a very large section of specific recommendations per country based on the legislation that that country has in place, based on local accounting principles, possible collaboration with the JRC and their upcoming reports. We want to expand to include more markets, recommendations, as I had just mentioned. And so now we can go into the